Good morning. Welcome to the Forex Pro Charts weekly analysis for the week beginning March the 16th, 2011. This week we are going to look at the Euro GBP pair. Now, something that you always want to remember about the Euro GBP or the EG is that the value of a pip is significantly higher on this pair than it is on most pairs. Therefore, your potential gain is higher, as is your potential loss. So if you're willing to lose 20 pips, normally you need to remember with the EG that 20 pips is probably $35 to $40 on the EG, and a significantly higher dollar loss to your account should you have a losing trade. So that's just something to keep in mind as we discuss the Euro GBP. Here we are looking at the monthly chart, and we see here where quite some time ago price was at a monthly high and has been moving down ever since. We see still that the EMA is trending up, but as price has moved lower, it looks like price reversed in this area, and we're expecting price to continue down to somewhere in this area. You can see from the tail end over here that price had been lower at some point, and we would be taking a look at that if we ever breached this solid lower edge of our trading field. But for right now, price is in a downtrend. Don't believe the EMA has caught up with that. And you can see this month that price has retraced somewhat, and for the last several months price has been bouncing between this zone and this zone, and you can also see that price is approximately midway between the monthly armpits. This is the monthly support armpit, the monthly resistance armpit. You can see that this is quite a large zone, and this monthly resistance armpit is quite a ways from the upper edge of our trading field. This one is a little bit more normal, but that be as it may, price is midway between the monthly armpits. So let's go ahead and take a look at our weekly chart. Okay, so looking at the weekly chart, we can see where price this week was in the newly formed, or recently formed on the weekly chart anyway, resistance zone that began with 8597, I believe. So price was here. This zone has the pattern on the weekly chart, rally base drop. Price had moved down to just short of this support zone, then moved back up into the resistance zone. We will take a look on the daily to see exactly what the situation is here. Actually, we did have a trade on this pair this week, and we'll be looking at that. But you can see that price has breached the 60-minute armpit. It's run up against this trend wall, and so we would basically expect probably price to move back down to either this zone or this zone. However, because we have another stacked zone fairly close, price could go ahead and move up. It would have to breach these trend walls, which breaching both of these trend walls will probably take some time. If it does, then it'll still have a little ways to go before it reaches this 60-minute armpit. This zone is not particularly strong. There is no pattern on the weekly chart. It's simply part of a larger downtrend. It is a large zone. Although the 60-minute risk is fairly small, the zone itself is fairly large and has barely achieved a 3-to-1 ratio, 1, 2, and 3, prior to price returning to the zone. However, it would be the first revisit to that zone if price moved up here. But actually, I would be surprised to see price get to the 60-minute armpit this week. This pair generally doesn't move just a whole lot in a given week, and I would be surprised to see it breach these intersecting trend walls and move all the way up. It would have to breach this monthly one as well and move all the way up to the 60-minute armpit this week. If price reverses and moves down, then it will be going to this set of stacked zones. Actually, the first zone here is the stronger one, because you can see we had the drop base rally pattern. Price did come back, and I would almost consider that a second revisit. It stopped just short. Moved back up, but now could come down. We have A fairly reasonable risk here. It's not too high. Price appears to have moved strongly out at the origination, although we'll take a look at that on the daily chart. Again, you can see that price will have to move through a couple of trend walls, although they're not intersecting. It will have to move through a couple of trend walls on its way down. Again, I wouldn't particularly expect to see price get this far down. The zone below, as you can see, is just part of an overall uptrend on the weekly chart. It has a very small risk, however, and is stacked just below, so if price were to move through this zone, there'd be a very good likelihood that it would turn here. And we'll take a look at this zone on the daily chart as well. Finally, we don't usually look at the third zone, but you can see here that if price moves to this zone, we've got a low risk, we've got a strong pattern, and this would also be a fairly good zone. Okay, now here we look at the daily chart. We see where the zone was formed and moved down, retraced, moved down, and you can see how close we were to this daily armpit here. Prior to price moving up, here it bounced again just short of the daily armpit, bouncing off a trend wall, coming back down, bouncing off another trend wall, and then here we see the trade for this week where price came up to the 60-minute armpit and then bounced back down. I believe our total gain on this was 104 pips. We'll look at it in more detail on the hourly chart. And then now price is moving back up, and I would expect it to kind of get hung up right in this area, but if this does not cause it to reverse, it will be moving up into this zone that we discussed. If it does come down, again, has to get through these trend walls, coming down, and I would consider this a reasonable zone to trade because of the pattern on the weekly chart. I would probably take this trade. It's got a moderate risk, not as small as we would like, but not excessive. Again, this all hinges on the fact that you're the premise that you're willing to trade at the higher pip value. So for those of you who are willing to trade occasionally on the higher pip value, let's go ahead and take a look at the hourly chart and see what happened right here. Okay, here we have the hourly chart. We see where price moved up, did bounce off of the daily armpit before coming back up, messing around a little bit, and then moving back up nicely to the 60-minute armpit right at the intersection with this trend wall. And you can see that first it hit this actually hit this 60-minute armpit and moved down for a gain of, I believe, 21 pips on this first initial price movement, and then came back. Now this price actually here stopped just a pip short of the 60-minute armpit. If you move your stop all the way to break even immediately, then you probably would have stopped out. Account with the spread, that 1 pip wouldn't have been enough to protect you, and you probably would have stopped out. If you move your stop, as we've talked about at length in several recent weeks, if you brought your stop down to just short of break even, allowing for this kind of price action and for the spread, then you would have been fine. Price would have moved all the way down, bounced off this trend wall after spiking through, and this was a gain of about 104 pips, and then price moved back up, moved through the 60-minute, and bounced off this trend wall prior to reaching the 5-minute. So we're going to see what happens to price this week and whether it moves back down, but at this point all traders should be stopped out because you should have had your stop set to break even by this point on any remaining portions of your trade to protect yourself from loss. So hopefully you were able to capture a portion of this trade. Hopefully the trend wall would have triggered you, that you probably wanted to protect your profits here. If not, you may have protected your profits once you got to this point, or maybe down to these left behind targets. All of those would have been good areas to protect your profits, and depending on exactly where you did that, you would have seen a nice gain on this pair for the previous week. So that is our analysis of the Euro GBP pair for the upcoming week of March 13th, 2011. For more information on Forex Pro Charts trade setups, or to subscribe to our full analysis and charting services, please go to www.forexprocharts.com. We do an analysis of 10 major currency pair every week. We then issue trade alerts depending on your subscription level, and of course bring you the results of those alerts at the end of every week. We do offer a free demo, and we look forward to seeing you on the website and back next week for the next video. Thank you. Have a good week.